Hello, Baker Finance students. My name is Joe Barnhill. I'll be working with you the next 7 weeks for our undergraduate finance class. And I like to post these weekly. It's kind of a way for me to reach out to you in another forum just than print, that we can kind of discuss what's going on for the week and kind of give you some insights for the weeks and things to think about, things to prepare for. But our course officially starts on Monday, and I usually post these video lectures every Sunday night or Sunday morning for the next week. But some things to think about for this week, go through the syllabus, look through the online course, look at all the resources that are available to you. If you look at the syllabus, some of the main objectives we're going to have in this course is you're going to have weekly homework problems. I've included homework templates out there to make it a little bit easy for you if you choose to use those. They're based in Excel. We're also going to have forum discussions weekly. I'm going to ask you to try to jump in earlier in the week than waiting until later in the week. A lot of times there might be initial post deadlines a Thursday or Friday, and asking you to respond to at least a student or two other students. And this week we're going to have a forum discussion on what you think the Treasury yield curve is going to look like. So if you kind of look at within pages, I think I put it in the notes in there, maybe 43 or 44 of your text, and there's a link out there to help you get to the dynamic yield curve. And I'm asking you basically what you think that it will look like 1 year from now and what you think best subscribes or the best theory to the shape of the yield curve. And there's no right or wrong answer. It's just kind of what you think gives the best answer to the definition of the shape of the yield curve. For this course, you're also going to have a main project that I'm going to ask you to look at a particular company. You're going to do a PowerPoint presentation. You're going to have a equivalent annual cost paper. And you're also going to have 2 exams. So we'll go through those items as the course progresses, but just make sure to read through the syllabus, make sure you're comfortable, and if you have any questions, make sure to ask those questions. And then for this week in particular, as I said, you're going to have the forum discussion, the homework due. You're going to read chapters 1, 2, and 3. Chapter 1 kind of addresses a lot of those principles of finance, that basically cash is king. Bottom line, when it comes down to it, what is it, the cash flow? And there are also other principles such as risk versus reward. I expect to be compensated if I'm going to take on additional risk. It doesn't guarantee a return, but if I'm taking on more risk, I'm expecting a higher potential return. And other things too, that markets are efficient. We make assumptions about markets. We'll learn more about that too as the course progresses. And there could also be conflicts, potential agent principal conflicts that we hire. In this case, agents to be managers of companies. We hope they make the best decisions in the interest of what we call the principal, the stockholders. And sometimes, we don't put the right incentives in place, or sometimes, as we've seen in 2008, and even after 2002, some managers, financial managers and CEOs did not make best interest of companies. They made the best interest for themselves. But chapter 1, the main thing is, I'm concerned about is kind of those principles. It talks a little bit about the business structures, but I'm less concerned with that because you've probably been exposed to that in other courses. Chapter 2 is going to give you an overview of what determines interest rates. You're going to look at a little bit about the yield curve. Think that there's the stated rate, but there's also things that make up that interest rate. It can be based on a risk-free rate plus liquidity premium plus a market risk premium. Maturity premium is what I should say. And then, when it says this 5% for this rate of return, it should be based on a variety of variables that determines that interest rate. Also in chapter 3, you're going to look at the balance sheet, the income statement, the statement of cash flows, something that we'll use later to calculate financial ratios, but think of the balance sheet as kind of a snapshot of the assets versus liabilities to come up with the equity from a book value perspective. From a income statement, it's kind of a snapshot in time of how we did. Basic economics, what's the amount of revenue we brought in, what are the costs associated with it, and what's left over. I like to call it the soup. I use reference for that. And then finally, statement of cash flows. Where did these cash flows come from? If we go back to the balance sheet and look at changes in the balance sheets, we can see how the cash changed over a period of time. But there's changes due to financing activity, change due to investing activity, and changes in cash due from operations activity. So you're going to read about all these things. There's PowerPoints out there to help you to summarize the material. But otherwise, get in there, jump in line, participate, ask questions, and we'll progress through these 7 weeks fairly quickly, actually. So, but just stay on top of things, you'll do well. So otherwise, I look forward to working with you all online. I'll post another one of these videos next week, but have a great week, and we'll talk to you online.